I have a very interesting meeting here. I'm in a Homewood Hotel Suites, Canada. Today I'm meeting here Tim McCarroll, mortgage broker, and we're going to talk about mortgages and interest rate and all the banks in it and out. So let's go and talk to him. Hi everybody, Alvina Asher, your Audible real estate expert is here. Today I'm meeting Tim McCarroll Tim, I'm really excited to have a chat with you about the topic that everybody's talking about, that on everybody's mind, and it is an interest for mortgages because, oh my God, we real estate agents gonna do anything to bypass you guys. And, I worked with you for so many different transactions from $500,000 to $2 million. I did not work for more than $2 million with Tim, but whenever I worked with you, you were a miracle worker because you were all about the client. You were all about providing client the best product and applying the best application. And it is really cool. Like, I have a really good experience to work with you. And recently my family situation also changed. I separated with my husband, and we're selling the house, and we're also thinking to buy a home. But even for me, I'm in the same boat like everybody else. I'm just wondering, what would be your suggestion for me to buy right now, or to wait maybe until end year, maybe until next year? What's going to be your view on that?
My honest opinion, because I've actually been in your situation about 10 years ago, and I completely understand what you're going through mentally, physically, emotionally, even it's the stress that adds on top, sometimes the unnecessary, obviously, stress. So I understand exactly what you're going through. My honest advice is it's case-by-case basis, because each client I talk to, they're at a different point in time, both in the divorce, both in the actual separation, both in the signing of documentation, which is really, really crucial. So that's really important to understand where people are at, so I can give you the guidance that makes the most sense for you and your situation. And when it comes down to your particular situation, it's really important for me to understand where you're at. Obviously, I want to make sure I take a look at where you have your mortgage currently right now, what interest rate you actually have right now, when is your renewal date, what does it look like in cost to get out of that mortgage. Does it make sense to get out of that mortgage? Obviously, because there's going to be a lot of different things to take a look at that. Once that's passed, and let's say we do decide it's a good time to get out of your mortgage, then we obviously want to find out how much can you get pre-approved for? What is your down payment going to look like? What are your overall debts? Are you sharing any of those debts with somebody else, like obviously your ex or children, whatever the case is? I have to take a look at all those aspects. Can we clean up some things, or maybe pay off some things with the actual sale of your home? What does this all look like? And that's going to be really important for me to have that relationship with you. And I kind of become almost your coach in a way, to really look out for you as to what's the best interest.
So what I heard from you right now is you becoming my financial coach before I am starting to look at anything, or I am getting into divorce, or I am getting into buying my first house, or I am getting to downsize. I still want to get involved with you, because you're gonna start to prepare for me a map of my the road from A to the closing of the house, and to be in the best position possible. Right, yes?
To go to your main question as to what is the best situation right now in regards to obviously waiting or jumping into the market as it is right now, I'm going to show you a great photo as to now versus soon to be. So as you can see on the screen, you can see the fact that in March 2024, the average benchmark price was $628,500. Obviously, looking at that column, you'll see the minimum down payment, land transfer tax, and obviously the cost at closing just being under $47,000. So taking the average mortgage interest rate right now available at 4.89%, which is a 5-year fixed term, you'll take a look and see that your monthly mortgage payments will be just under $3,200 per month. So that's today. What happens if we wait till January, 10 months away? What's going to happen to the market? Well, let's in this example, we'll say that the interest rate has come down a full 1%, and that is a huge full 1%. So instead of 4.89, now it's 3.89. So again, using a $100,000 increase in price of the home, which is what is going to actually inevitably happen if the interest rate does come down. There's a very good chance it's going to go up. You can see that your closing costs have gone up by $12,000. That's really important to understand. So now something, not only has the house price gone up, but also your closing costs, the amount of money you have to have at time of closing has increased by $12,000. But at the same time, including the interest rate at 3.89, you can actually see on the screen that the monthly mortgage payments are just under $3,700. That's almost a difference of $500 per month. And of course, over a course of a 5-year term, that's almost $30,000, $29,000 actually. So again, you can see the fact that waiting till January, where the interest rates will be lower, but obviously house prices will be higher, is not a good idea. Now, obviously, the last column on the graph, you'll see the fact that house price has gone up by $50,000 instead of $100,000. Let's just say, Tim, I don't believe you. I don't think the house is going to go by $100,000. Well, okay, for those disbelievers, let's take a look at the math at what it will look like at $50,000 increase. So with a $50,000 increase, not a $100,000 increase, and still using that 3.89%, which is 1% lower than where we are today, you can see that your monthly mortgage payments are just $3,438. That's still $245 over what you are paying now, which means over the course of 5 years, you'll be paying additional $14,580 in additional costs because you wanted to wait on the sidelines for a better interest rate, but you know inevitably that means the house prices will go up. So this is the pure math to show that everyone who's watching this video, this is what you want to take a look at. It is not worth the time to wait on the sidelines for that interest rate to come down because it will kick up the prices of houses exponentially.
Tim, I have a little bit unorthodox question.
Okay.
And what's happening is this was how it is in my thoughts. I was talking to my son and I'm saying, like, why wouldn't people just pay the interest for the mortgage? Do not pay the actual mortgage, off. Because, it is inflation. The price of the house, the price of the condo, gonna go up anyway. Why would you pay the mortgage and right now not to have enough money for some recreational activities?
Correct.
And instead just ride the hard times with interest only. And then in 2-3 years when the interest is going to go down, you just can already start paying the prime side of the mortgage too. So what would be your view on that?
Makes sense. Fantastic question. Obviously, I can see where you're coming from because of the fact that your house is going up in value, but again, you're just waiting and obviously just paying off the interest and just doing that as a minimum payment. So on average, again, you'll have to make sure you verify this with the person you're speaking to. Obviously with me, I'll give you this information, but on average for $100,000 of debt that you currently owe, it's gonna be roughly around $575 to $625 per month. So we'll stick with $600, that's what's a good idea. $600 a month of just payments. So again, that's for every $100,000 you owe. Okay, so based upon that information, is it a good idea just to pay interest only? It really depends. If by any chance that you're using this line of credit or this loan for a investment property, well, yes, 100%. Obviously, your accountant's going to agree with me 100% on writing off that interest, and you'll have to talk to your accountant about that. If this is your property yourself, again, it really depends on what your long-term goal is. If you're looking for something that is the fact that, hey, I'm just going to be doing this temporarily, inflation right now is kicking my butt, and I have to, liquefy as much as possible with all my assets across the board and make my payments as little as possible, I get that. One big thing a lot of people are coming to me and asking that kind of goes in parcel with what you're talking about is, do I get a mortgage or do I get a line of credit that's secured to my house? With the interest only payments that you're talking about, it really tends to go to the line of credit. If you're paying interest only right now on your mortgage, I am sorry to hear that. It's because obviously your payments have gone up, most likely you're on variable, obviously your payments have gone up so much and you're just paying obviously the interest. It's not always a good thing because you're not paying any amortization. Side note, when a lot of people come to me saying, oh, I want to switch from my variable rate to my fixed rate that I can offer, even though the fixed rate is lower than what they are currently in as a variable rate, their payments actually increase. The reason being is because currently right now they're not paying any type of principal, they're just paying the interest. So going back to the other idea, if you're just looking to pay interest, that's going to be a line of credit. And that is something you can do and actually have options of paying just the interest. I'm doing it right now on one of my mortgages. I've actually split my mortgage up into 2 mortgage segments, and one of them is a variable, and that's obviously what I'm just doing. I'm just paying my interest.
We had an amazing meeting with Tim. We found out a lot of different nice, good, interesting information about interest rate and all the mortgage in and outs. And you know what? I hope that you found today and heard everything you needed to hear. If not, you can call me and I'm going to let you speak with Tim. I'm going to put you in contact with him. If you want to sell or buy the house, you know where to find me. Alvin Asher, your Ottawa real estate expert.